Joining me now is Mitch Berlin. He's Vice Chair of Strategy and Transactions at EY Americas. The way that people are in the markets are talking, Mitch, you'd think we were about to see it double.
You would think so, but you have to split that in half because part of that is private equity and part of that is corporate. The private equity side will see much more, probably about a 16% increase, and corporate we expect about an 8% increase. A lot of that volume coming from private equity is really just from pent-up demand, a lot of dry powder, a lot of mature assets that are coming due in terms of the debt that's leveraging those assets that they have to shop around. So it's really a tale of two cities in some ways. We'll see modest corporate growth, but probably significant PE growth.
Let's do a little fun segment we're going to call newspaper headlines from the future. Okay, so it's 2025. It's January. Honestly, maybe it's even in the next month or two because why wait? These things take a long time to get passed. What kind of headlines should we anticipate?
I think we'll see larger deals. I think the headlines will say technology still remains the #1 sector for M&A. A lot of that due to AI everywhere. So non-tech acquiring tech as well as tech acquiring tech. I think you'll see a headline that says oil and gas continues to be a major player in M&A, less from a volume perspective, but from a value perspective. These are really big, meaty deals. And I think you'll see life sciences decides to free up some of that cash on their balance sheets and make some acquisitions. There are a lot of spins and divestitures in life sciences over the last few years. They have very cash-rich balance sheets. They need to repopulate the R&D pipeline, and so you're going to see acquisitions made there. I think probably another headline is that deals are easier to get through the FTC and DOJ approval. They still have to go through, but I think more will pass versus being killed. So those are 4 big headlines coming up.
I love it. I think we should keep going with this. One of the biggest beneficiaries are going to be the companies involved. I mean, for investment bankers, for instance, Piper Sandler, and a friend of mine there was the first who kind of keyed me onto this idea, this refrain that, quote, the bankers are coming, because they are. And Piper Sandler shares have doubled this year and are at an all-time high. That's incredible.
That's not a surprise. Look, we're working with a lot of clients to help clean up the businesses that they want to sell, a lot of value creation exercises. So the EBITDA is higher. The bid ask, there's still a large gap between the bid and ask. So if the multiple is lower, at least if it's applied to higher EBITDA, you're gonna get more value for that deal. So when we think of all the work that we're doing to clean up operations and make these companies more profitable and greater EBITDA, it's no surprise that they're going to be shopping these in the next year.
Let me sneak this one in there. It might be actually the most important question. Is this deal boom going to happen even with rates if they stay at current levels?
It will. We actually think the rates will probably go down about another point in 2025, maybe even another quarter point this year. But it will happen. There again, a lot of these deals are being funded through cash that's on the balance sheet and stock. The capital markets are very healthy. So there can be a lot of stock deals out there as well. And then there's private credit that continues to be very popular. I think 3/4 of the deals that were funded by credit were funded through private credit this year.
Totally. No, it's been a huge source of growth. And I think we'll wait to see in the long run, how well investors do with all this. But for right now, as you've made it clear, those headlines are that the deals are coming. Mitch, thanks for joining us to talk about it. Really appreciate it.